Welcome to another episode of the Vets in Real Estate Podcast. I am Will Curtis, your host. I'm joined by another veteran who has made that transition out of the Navy and into life, into real estate. Shawn, thank you so much for joining us.
Yeah, thank you, Will, for having me on. I really appreciate it.
Yeah, so tell us, what is it that you did in service?
Okay, I'm going to give you the very short version of a very long story. When I was in high school, a long time ago, I enlisted in the delayed entry program. I also applied for an ROTC scholarship. I know you'll be utterly shocked to know that the government screwed up the paperwork on the scholarship. So by the time they got everything straightened out, I was already through uh, boot camp, my BEE school, and ETA school. And I was getting ready to head back down to Orlando for nuclear power school. Yes, I was slated to be a nuke ET. Well, anyway, at the end of ET school, I got this letter saying, hey, congratulations, you're the recipient of a scholarship. And I'm going, what? Because before I'd gotten one that said, hey, you've been denied for whatever. Anyway, they got it all straightened out, went to school, commissioned, went to San Diego for yet more training, reported to my ship. I was originally going to be the engineering officer, and halfway through EAL school, they said, "Hey, we're going to tack on a 2-week gunnery school, and you're going to be the gunnery officer when you report aboard." And you know me, it's like, hey, whatever. I just go with the flow.
Sure.
So anyway, reported to the ship, was a gunnery officer. About 6 months in, they combined the guns and missiles division. Did that for probably a year and a half. Uh, got promoted, ended up being navigator. We did a Westpac. So I got to do all the fun stuff that's associated with being a navigator. There's lots of things being a navigator that's not fun. Like you have to write the captain's night orders and get him to sign them and bless all that fun stuff off. But the most interesting thing that happened to me during that period when we were the gunnery and missiles officer is our ship had the, and I'm going to say air quote, privilege of firing the last improved Tartar round in the fleet. So we got the missile, put it on the rail, had a drone flying across, towed by an aircraft. We shot the missile, it went up, and it started circling around and coming back toward us.
Oh, no.
And I saw the captain reach over and grab the sound-powered phone talker, grab the mic, and yell, all ahead flank, right full rudder. And the ship, we're already doing like 15 knots, and we start heeling over, and they're trying to self-destruct the missile. It didn't do anything, and it splashed down about 100 yards astern of us. And that was an interesting event. But yeah, I've done a little bit of everything. I started off going down the enlisted path and switched over to the dark side and became an officer. And then when it came time to make that decision, I had about 9 years of service in, and it's kind of that point where you go, hey, I either need to figure out and make a career out of this or get out and do something else. Well, we'll just say the last CO I had was a non-people person, and we'll let it go at that. So I got out of the Navy, went into corporate. My intention was to go back to Tennessee and get a job there. That's where I grew up in the mountains in East Tennessee. Nobody was hiring. This would have been 88. And so like nobody was hiring. And I had interviewed with a bunch of defense companies. Texas Instruments called me back and said, hey, we liked your interview. Come down. Long story short, they hired me, which was kind of funny because they hired me as a manufacturing engineer. And I told them at the end of the interview, I said, don't take this the wrong way. I said, I want the job. I'm really looking forward to moving down here. I said, but I want to be clear that I'm not an engineer and I have no manufacturing experience, and you're hiring me as a manufacturing engineer. And they go, yeah, exactly. They said, we're hiring you for your military experience. We'll teach you anything else you need to know. I said, cool. So anyway, did that for a while.
Yeah, I've heard that, especially those coming from the engineer side of things as well. Military engineering does not transition anywhere close to civilian what they think engineering, where I had a guy that was he was army engineering. He's like, you want me to build stuff, my job was to blow it up. Like, that's a little, it's the opposite direction of what we're trying to do here. He's like, you
Yes,
want me to blow it
yes.
up, done, I'm your guy. uh
Yeah, which is kind of funny because I've got a friend of mine that spent time in the Seabees, and he said we probably blew up more things than we built.
and it makes sense, I mean, given the military mission. But it's interesting how something like engineers have the same title but yet mean completely different things in service versus out of service. And it really becomes interesting, how do you transition those skills into civilian world?
Well, yeah, and that's always the rub. There is this language barrier, you know, and it's not just the military. Every company has its own unique language and how they do it. Because I've worked with a bunch of companies, I've done consulting, I've done a little bit of everything over the years, and you have to learn to first you have to approach it like a mission, right? You've got to understand what's the target. If your target is to get a job somewhere, you need to understand that company and what it is they do. And then you need to look at what skills did you develop in the military and how can I map those onto here? The first and foremost one that is really a lot of people discount is leadership. If you've held, you know, any position higher than just a basic grunt private or, boot seaman in the Navy, you have some leadership skill. Leverage that. And, uh, and there are groups out there that are happy to talk to you about, how do you take and translate your skills in the military into the civilian world. But part of it is, it's on you. It's your homework. You need to go do that.
I would agree, and I think that's one of the things that it struck me when I was in college. So I did my 7 or almost 7 years, got out, went to go get an undergrad degree, and we're doing our elevator pitches. And I was like, "Look, I'm a transitioning soldier. I had $2.3 billion worth of hand receipt items and da 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 da." And the lady across me, she goes, "Look, the fact that you're military is great, but you don't have to lie about what you did." And I was like, I'm not lying." And she's like, "No, you're not even like 30. There's no way they gave you 2 point something billion worth of equipment." I was like, I was responsible for, an Apache is 40 odd $1 million. I could do all the math back then, right? The Apache is so many. I was responsible for the maintenance and every bit of it. It was a, 2 point something billion
Yeah.
hand receipt. And I think that's one of the things when you transition the military, you miss so much because you have so
Yeah.
much more responsibility than your counterpart. Where I now have
Oh,
a
yeah.
26-year-old son who is, or 25, he'll be 26 soon. I had already been in service, got out, was going back to college, and I'm looking at what he's done, and God bless him for not having to go in and doing what he's doing. But the life experience is so drastically different from where he is today versus where I was at his age.
Absolutely. I am a huge proponent. I think when kids graduate high school, you give them a choice. They either go in the military for 2 years and you ship them overseas, or they go in the Peace Corps for 2 years and you ship them overseas. Either way, you get them out of the country for a couple of years, let them see how the rest of the world lives,
Yes.
get a little life experience and, just live a little.
Yeah. So, how did you go from naval officer into working for Texas Instruments, then into real estate? That doesn't seem very linear in that thought process.
Nothing I've ever done in my life has been linear. It's just, there've been, an opportunity opens up and I explore it. And if it makes sense, I go jump on it. And so um I worked for TI up until the point where they sold their defense group to Raytheon. And then Raytheon was still doing all of the defense, you name it, they built it, right? And worked for Raytheon for about a year and a half, and then they packed up and moved out of town. I didn't want to move to Tucson, Arizona, because I didn't want to live in the desert. Couldn't afford to move to Andover, Massachusetts, because I'd be moving from Texas, a state with no state income tax and a low cost of living, to a state that we affectionately know as Taxachusetts. It just wasn't feasible. So anyway, I ended up doing some consulting, ended up on a gig with Southwest Airlines. So I started working in their back office finance system because I was a math and computer science guy in college. And I had transitioned while I was at TI from manufacturing engineering into test engineering, where I was writing software to test the fun toys that we made. And I think all of them have been declassified now. I could probably talk about them, but you know,
Yeah, nobody needs to go to jail.
yeah, nobody needs to go to jail, and you guys have, you probably go, oh yeah, that's old equipment anyway. There's so many fun new things out there. I try to keep up with them, but it's crazy. But yeah, ended up at Southwest Airlines, and a friend of mine had invited me to this weekend 2-day seminar on investing in real estate. The first day they talked about single family homes, and hey, you can buy 10 single family homes and replace your income and retire. And I did the math, being a math guy. I'm going, it's probably more like 15, and just because they're not all going to be occupied 100% of the time, and you want a little bit of a buffer. And then the next day they talked about multifamily, where instead of having 10 houses, you may end up with 50 units under one roof. Well, now you can hire a property manager to do all of the day-to-day stuff that you don't want to do. And trust me, I mean, unless you've got a true gift with people, you really don't want to be a property manager, right? And an on-site property, because there's a lot of headaches with that. And but anyway, long story short, I wasn't ready to go buy an apartment myself, but my buddy was, and so I invested in his first deal as a limited partner through a process called syndication. It's just a fancy bunch of paperwork that says, "Hey, we're going to make a private stock offering to you," and it was, at the time, it was about 30 pages. Now they're about probably 50 or 60 pages, and there's like 14 or 15 pages of stuff in there, all reasons you should not invest in this deal. And and I had an attorney go over all of that with me and explain it. He goes, you shouldn't let these 14 or 15 pages scare you unless they're missing. He goes, because if they're missing, they're hiding something. And he goes, what these 14 or 15 pages should prompt you to do is go, hey, Mr. or Mrs. Sponsor, how are you mitigating all of these risks? Because that's what they are. They're risks to the deal. And the short answer is 80% of them are having the right insurance, types of insurance and amount of insurance, and the other 20% is doing a thorough physical due diligence, so you really know what you're getting yourself into. So that's kind of how I got in it. I started as a limited partner, and then you fast forward to November of 2020. My wife and I were talking about our finances, and we're kind of going, we've got a pretty good retirement lined up, but we, pretty good, not great, right? So we wanted to have a great retirement. My wife would travel 6 times a year if we had the budget and she wasn't working. And I don't mean travel to like the Grand Canyon. I'm talking like Africa, you know,
Yeah.
Bali, Indonesia, you name it. Just travel the world. Our favorite place to go is someplace we haven't been yet, and I've been a lot of places. There's still a lot of places to go. But anyway, yeah. I'm sorry I went down a rabbit hole, and
No,
now reel me back in.
no, you're good. So how did you get? So you did your first LP. How did you get in even further than that?
Well, so my wife and I were talking about our finances, and we go, hey, we need to juice our returns. And we looked at it, and we ended up saying, becoming a general partner on a deal is work. Don't let anybody kid you. It is, if you're doing it right, it's a job. And you as the general partner need to take that very seriously, because now you're not only responsible for your own money, you're responsible for other people's money, and you better take that seriously. And if you don't want to, don't do the job. Invest as a limited partner, let somebody else take that risk and the headache with it. But we got in, we bought our first one in November of 2021. It's an 86 unit property down in Cleburne, Texas. It's still to this day my very best property. It cash flows. We've distributed a little over $750,000 back to the investors, and that was on a $4 million capital raise. So we're almost to the 25% mark where we've returned 25% of the investors' money in 4 years. And this has been over the last 2 years have been absolutely miserable for multifamily owners. Because I was invested in a deal as a limited partner where we lost, gone away 91% of our capital. So on a $100,000 investment, we got back 9,000. Not fun.
And to me, that's the scary side of investing on that side, especially doing syndications
Absolutely.
or in a fund, is that you are literally trusting somebody else with your money.
Hmm.
What does that vetting look like when you're going and you're looking at somebody and you're vetting who that GP is? What is your process in that? What are you looking at to see, are they worth giving 100 grand to?
That is a great question, and not one that we can answer easily in 30 or 40 minutes. And we've already spent probably more than half of that. The short version is, don't go with your gut. I mean, listen to your gut, but you need to do some real research on this person. What's their track record? Are they willing to give you names of the people that have invested with them, that you can call and use as references? Are they willing to, um, you know, give you, uh, financials on the properties they've run, so that if you want to dig into the financials, you can see, was this property well run or not. Now that assumes you already know how to read financial reports, um, which, if you're going to invest in a multifamily property, um, you need to at least, you don't have to be an expert on reading the financial reports, but you do need to be familiar enough with them that you can open them up and look at them and go, okay, this makes sense. And I can tell, is the company staying steady? Is it increasing revenue? Is it decreasing revenue? You know, there's a lot of things, and there's some funny accounting tricks that people can pull to hide stuff. Part of it is you have to trust them that they're using a company or they're doing it themselves. And again, going back to your question about how do you trust them, is you don't, to start with. You do your homework, and just like if you report to a new commanding officer in the military, you respect their position because they didn't get there. Well, maybe they did get there by being an asshole, but they got there. There was some merit involved somewhere along the way. You don't immediately trust them until they've earned it. And I would say the same thing with sponsors, is they need to earn it, and they can earn that by answering all of your questions, putting you in contact with people as references. uh, you know uh, if I'm going to write somebody $100,000 check, I might go so far as to have a background check done on them, especially if it's somebody new. Now, I've got people in the group that I've known for years. I invested with them because I've known them for years. I've got another guy I invest with. He's Air Force guy. Very sharp, uh, very meticulous, and um, my wife is his favorite investor. Because he brings out a deal, she writes him a check. So yeah, it doesn't happen overnight. I'm sure you've heard of Grant Cardone, and you either love him or hate him, because there's no middle ground with Grant. I love Grant, by the way. He's great. He has a lot of good. One of his favorite sayings is, real estate is not a get rich quick scheme. It is get rich for sure if you do it right. And so part of doing it right is, if you're going to invest in real estate, you need to understand, you know, the terrain. How does it work? Just like a military campaign, if you don't understand the terrain that you're going to be crossing, and you don't have the right equipment, you're going to have additional challenges.
Fair. So you went. I want to go back to, you talked about understanding how to read the property financials and all that. knowing, me and assuming most, enlisted folks were like me, math was not my strong suit. When I went back to do my undergrad, I didn't do remedial math. I did remedial math where you had to color in how many duckies the farmer had, right? So how do you go from somebody who may not be math literate or who may be straight up afraid of math? How do you go from that to being able to read and understand what those financial statements mean, especially when you don't know what half that stuff means or how that's supposed to flow?
Yeah. So one of the things I would say that I found personally with people that don't consider themselves good at math, they are good at visualization. So you can take those spreadsheets and either you or you know pay your middle schooler to put it in an Excel and make charts, because I'm sure they can do that. And then you look at the charts, and what you're looking for is trends. And unless you're a really true math geek that sees the lines and the numbers in your head, I prefer the charts myself. It's easier to spot trends. So what you're looking for out of financials, like a trailing 12, or you'll hear it called a T12, which is the last 12 months of the financial operations broken down into a whole bunch of different categories. Generally, big categories: income, expenses, liabilities. That's the three big ones. And you look at, is the income trending up? Are the expenses trending flat or down? Or are they trending up? I mean, so what you do is you look at the trends, and then you can ask, you start with simple questions. You say, hey, I looked at the T12 income trend, and I see we've been flat for the last year. I thought we were going to have a growth projection of like 3 or 4%. Yeah, and you don't even have to throw that in there if I thought we were going to grow. Why has it been flat? So that's a very valid question to come back and ask the sponsor. And if the sponsor goes, don't invest with this guy again. They, or if, I mean, or don't invest with them the first time if that's, if they give you financials to look at and you go, well, because the sponsor needs to be able to articulate these things to an individual to go, hey, you know, uh, we're flat this year because we just spent $3 million on rehabbing the property, and we had a bunch of vacant units that we went in and fixed up, and we had to replace the roofs, and we did the paint, and we had to do the uh, the parking lot, et cetera, et cetera, et cetera. And so that's why it's been flat this year. Our growth projection is slated to begin this April when we're complete with all the renovations. That's the kind of answer that you want to look for.
That's fair. And I think that's the side of the GP. And that's when, from being a broker on this side, dealing with some of the syndicated funds and looking at some of the GPs, to me, it's shocking that some of the GPs are able to raise money sometimes because you listen to them. You're like, you speak in cliches. You don't know what you're talking about. And when I'm challenging you on, here's what the deal looks like, or especially on the owner side, you're trying to buy it, and I'm challenging you on some stuff, the understanding goes out the window. To me, that's the scary thing. That's why when a lot of veterans come to me saying, hey, should I go get in a syndicated fund? My answer is more often than not, no, not right now until you understand what you're really digging into.
Oh, absolutely. I would tell people, um, you know, there's going to be more deals tomorrow, and there's going to be more deals the day after that. Don't go chasing a deal. Don't If you have somebody that's hawking a deal and they have a lot of sense of urgency messages in their communications, like, going fast, only 5 spots left, blah 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 blah, things that give you that sense that if you don't invest today you'll never invest. Trust me, they're wrong. Because now we will use some language like that, but only if it's true. Like we had our last deal that we bought in September. um it was a small for us. It's a 104 unit property in Irving, Texas. We closed the capital raise on that in 5 days. Our next project, I feel pretty confident in saying it won't close in 5 days because it's more than twice that size. Um, I can't really talk about it because it's not under contract yet. Uh, and I would tell people, I say, look, don't rush into this. I mean, you have a very good point. Not right now. It's like I I I strongly believe in real estate, especially right now. The next 18 months is going to be a buyer's paradise for commercial real estate because there's I think sometime around May or June there's this wall of loan maturities that's coming due, and there's a bunch of banks that are going to have to step up and either bite the bullet and take a loss or figure out something creative to where they can keep that property moving. And people like us, we're already in conversations with one SREO uh, officer at a bank on two different properties that one of them we could step in and just become the manager for a small piece of equity and a management fee. And we're going, we'd do that in a heartbeat. And that would keep the bank from completely losing their loan on it. But anyway, we're getting way down in the weeds here, deeper than most people are going to want to know about or care about. But
Well, I'll challenge you on that. I think no. I think these are the things that the average veteran looking at transitioning in, these are the things that really do make a business happen or not. Where some investors jump in and, hey, I don't have the time. I've got one right now who's like, I've got a full-time job, I make good money, but I want to make more money. I don't have time to manage. I don't have time to do all this. And the answer, basically, he said, hey, can you go find me a property? Can you go buy it? Can you lease it? Can you manage it? And then when we're ready to sell it, can you do it all? I just want to be hands off. That investor is drastically different than somebody who, like, this is my full-time job. I can
yep.
invest in managing. I can deal with the tenants and toilets at 2 a.m. That's fine by me, and dealing with those kind of things. And I think
Hmm.
that's the nitty gritty that the guy at the Holiday Inn Express isn't telling you when he's come invest in this deal and that deal and go, those kind of things. And that's what got me into
Hmm.
it, right? I sat through a Rich Dad Poor Dad seminar, and I was like,
Yep.
I'm gonna be a millionaire before I get out of the military. That was the plan. But I think those are the nitty gritty things that
I
aren't
think.
talked about in the industry.
Oh, absolutely. And I think, and you hit one word you said there earlier was business. You've got to treat both approaches to this either as a general partner or as a direct real estate owner as a business. You have to really treat being a limited partner as a business. For the guy that's working a full time job, I would say that's great. You have some excess cash. You need to look at it and figure out, what's your risk tolerance and what can I do with that cash so it's not just sitting in the bank earning 0.001% or whatever it is now. Not much. If you're lucky, you might have an account that earns 2% now. Well, you're not even keeping up with inflation. So you're losing money still. You're just losing it slower. You've got to figure out a way to put it in. And the other thing I would say to people looking at investing as real estate, you absolutely have to understand investing in real estate is illiquid. What that means in very simple language is if you invest 100K in one of my deals and then you call me up next month and go, hey, Shawn, I need a new set of tires for my truck. Well, it doesn't work that way because I can't sell your chunk of the real estate to anybody. Now, there's some people talking about, you know, uh, tokenizing real estate with crypto and the blockchain. It hadn't happened yet. Well, there are some test cases out there, but it's not mainstream enough for that to happen. Eventually, real estate might trade more like the stock market, but again, right now, today, real estate is not liquid, and you have to understand the time period you're locking your money up for. Most syndications will tell you 5 years, 4 to 6 years. It could be three, it could be seven. And you have to be prepared for that. So, part of your plan as an investor is okay, am I willing to take this chunk of money, put it over here, for this amount of risk, because I don't care what you're investing in, there's risk in it. If you're investing in your kid's lemonade stand on the corner, there's risk, and you need to understand what those are. Um, and that's one of my big hot buttons is risk. I can talk about that all day long, but anyway.
Well, no, I think you're onto something, and that's one of the things I've said many times. I think many, especially real estate brokers, but I think real estate investors as well, is that their risk meter's broken. Like, and if you listen to brokers, we're the worst about it because everything's a great deal. And you know what? To an extent, everything is a great deal if you get it at the right time, you get it at the right place. It can always be the great deal, but we all know the reality is that I have bought many a great deals, or for clients bought many a great deals that they were sold the same thing. It was a great deal when they bought it, and I'm buying it out of foreclosure. Or I'm buying it at a deep discount because it really wasn't a great deal at that time because the risk meter was just kind of broken.
Yeah, and that's one of the things that, not to get off in the weeds and really scare people, but when people start talking about cap rates, well, what cap rate did you buy it at? And so, well, it depends, because cap rates are somewhat subjective. Yes, you can calculate it, but it's all based on what's going on in the market, right? A cap rate is just if you put it very simply, if somebody says, "Hey, I bought this at a 7 cap," what they mean is they expect to get a 7% return on their investment, I believe, annually. I mean, now you're the one with the CCIM, and for your and for
Yeah.
your for your listeners that don't know what a CCIM is, that means that Will has a black belt in real estate analysis.
Well, and we hear that a lot of times too. Is cap rate is the end all be all. What I'll say, the positive for cap rate is, yeah, it's looking at least next year, you should get a 7% return. What it doesn't do, though, and why cap rates are really a snapshot in time, is that it doesn't take into effect really the risk of that tenant that's in there. Just because they're saying the cash flow's there, if that tenant is in a bad industry or that tenant is Boeing and they keep losing doors on airplanes, that the tenant's gonna be worth
Well, or
less.
your apartment's half filled up with Somali daycare workers.
Right, right, right. Like those, I mean, those are legit concerns, right? And I
Yeah,
know we're
yeah,
being tongue in cheek, but that's
yeah.
exactly what can happen is suddenly that those individuals are no longer there, that credit worthiness is no longer there, and sometimes it's there. And what I know with the CCIM, that when we go through that coursework, what we really teach it as, it's a measure of risk, and it's a way to compare apples to apples. So if I have this building over here and that building over there, they're relatively risked the same, and that's what we use cap rate for. But I will say, I can remember it vividly early in my career, the investor that was coming out looked at me like I was an idiot when I was like, well, look, the cap rate's going to be subjective. No, cap rate's cap rate. No, it's going to change depending on what the market does. And at the end of the day, the cap rate isn't guaranteeing you returns. You need to underwrite the whole thing. I'm just going to buy it at 10 cap. That's all I need. I just need a 10 cap and I'll make my money. And I'm like, that's not how that's not how it works. It's a great, a back of the envelope number to calculate, but there's so much more financial analysis
Yeah.
that can go into it that I think, sometimes the weekend class or the bigger pockets, chat group or Reddit thread can sometimes be a
Hmm.
little misleading, unfortunately.
Yeah. I mean, and this is one of those topics, you could probably do 3 or 4 podcasts on, and you know, and not to scare people off. When I first started investing, I knew virtually none of this, and I've been invested as a limited partner since about 2014. Going on 11, 12 years now. I didn't really seriously dig into the GP side of it, the direct ownership side, until probably into 2020, early 21. So yeah, it's been a learning process. It's been a learning process. Just like whatever your MOS is in the military, you didn't get there overnight. You spent some time in school figuring it out.
Where have you gone for that learning process? I know we talked about CCIM for the broker, the lender side. That's kind of where we go. But on the investor side, where do you go for that learning process? Where do you get to learn how these deals should really go together?
So if you want to go on the cheap, I would start with, your whatever your favorite large language model is, Chat GPT, Claude, Gemini, Perplexity, pick one, and just say, hey, I want to learn about real estate. Here's my current situation. Here's my skill set. Here's what I know today. And you don't have to go into excruciating detail. Just give it some summary and start having a conversation with it about what do I need to know to be a good real estate investor. If you're one of these people that does better with formal direct education, there are dozens of people out there willing to take your money everywhere from $49 all the way up to $100,000, and are happy to teach you. This is all stuff you can learn on your own. If you're a good student and you like learning stuff out of books, and you don't mind having a conversation with Chat GPT here and there to answer some of your questions, honestly, I would start there. That would be one of the things I'd do different. Is when I got out of the Navy, I would have immediately started educating myself about real estate and other things that I can invest in outside the stock market that I have more control over. Because I invest in oil and gas and some other businesses and a few other things as well. But um, right now, the core of my portfolio is real estate.
I like when you brought up about businesses, and this is going to be completely off topic from what we typically do. That's one of the things that I know we've been looking at as well, is that businesses seem to have sometimes better returns. Now you got to be a little more active in them, but I mean, I can't tell you how many times on the brokerage side, we had one not long ago where it was an HVAC company. The guy's kids didn't want to have anything to do with it. I think I'm just going to go ahead and shut it down and sell the building. And he turned around and he shut it down, shut the business down, closed it up, and then came to me and said, "Hey, let's sell the building. I think it should be worth $2 million." And I was like, "It's probably worth about 750." What? Well, I had the business, and they, oh, well, yeah. If you looked at your business, your numbers, you'd have got 2 million for the business by itself and the 750,000. So you'd have been,
For the
2.7,
Yeah,
2.75 if you'd have kept the business going. He's like,
yeah,
but I didn't know. And I was like, shoot, there are enough people out there. Even I was like, I would have worked out some kind of, let me pay you out for the next handful of years. Let me jump in here and run and
yeah.
modernize
There's a ton of
some of the
different
things.
ways that, and we're the same way. We've just started looking into buying businesses.
Mm,
We've actually put a couple of LOIs in on two or three different businesses. Uh, we learned a lot on each one of them, and we haven't won one yet. But one of the things that impresses me about well-run businesses is something that's a challenge with, especially older, heavy value add multifamily properties, and that's cash flow. They are good, solid cash flow producing machines. We looked at a concrete company, and I looked at their financials, and I'm going, damn, these people are printing money.
yes. And sometimes with them, it's a shell game over who has the property, what division. I mean, it's interesting, and I think that's the fun side of once you understand the math, you start looking at this where you really start seeing value. And then we've even looked at buying a property management company, with some of the folks that are in our market that are starting to age out. And I'm looking, and I was like, you still have three accountants. You're paying each accountant 70, $80,000 a year. Like I could grab a VA CPA out of Mexico and pay them 20, $25 an hour, and they're going to do probably better quality work than what you're doing. I could cut
And it'll be consistent across the whole portfolio.
right. I could turn around and cut my costs significantly. So while it's a profitable business doing well, there's a lot more profit to be had in some of these
Mhm.
businesses as well. And I think even if you're looking at getting into that side of the world, I mean, there's so much value, so much opportunity there if you just know where to look and you
Yeah,
know how to run business.
yeah. The big thing I would caution people about, if you're going to become an owner of any business, whether it's a multifamily, a concrete company, an HVAC, property management, you as the owner need to make sure you have a good capital reserve, and that capital reserve is allocated to, uh, like when we have a when we buy a property, we raise money, and we always raise extra, and I put it in what I call our owner reserve fund. I also refer to that fund as my oh crap fund. So when the property manager calls me and I go, oh crap, I reach into my oh crap fund, throw some money at it, and now what would have been a major headache has just become an inconvenience. Because I guarantee you, stuff happens, and you have to be prepared for that.
No, and I think it's one of the other things that we see a lot of young GPs when they come into the game. They don't think that side of it through. And too many times, I mean, I spend most of my day in property management, right? So when you're looking at it, something happened. We had a teaching with another CCIM instructor. He was ready to sell a building. It had been his office for years. You know, in a situation where he needed the money, he's kind of retired. He doesn't use the office anymore. His family needed some healthcare expenses. That kind of situation came up. And the day before closing, somebody drove a car through the front of the building.
Oh,
And of course, that
yeah.
pushes closing back. It does all those things there. The buyer, super chill about it. It was great, but that deal could have died right then and there
Hmm.
if he didn't have the money right away to turn around and put into it to get it fixed. Insurance is going to have to reimburse him to help cover some of all that. But if he didn't have the money in place, he could have lost the deal. He could have lost everything, but he had money set aside. And I'd
Well,
say
and at the
often
very
happens.
least, it would have been, 6 months or 6 weeks or longer just to get anything to happen.
Right. And we see it all, especially for the property management. It's always one of my worst calls is, hey, the AC's not working. We go out there, we look at it. Oh yeah, that sucker's shot. Hey, it's 30 grand to get this sucker replaced. I
Yeah,
don't
especially
I
if it's
don't
a
have
big
that kind of money.
chiller.
Well, yeah, I've had some of them where it's a roof or something like that, where it's millions to do some of that. And of
Yeah,
course, the owner's like, I don't have that kind of money. What am I supposed to do? I'm like, well, yeah, now you're in trouble.
get a box of band-aids and run out there quick.
And I've done definitely some duct tape on a few of those to get it go by until it's completely shot, and it happens. Well, Shawn, I appreciate your time. I appreciate you're willing to share your journey with us and all that as well. And we have one last question: if you're to do it all again, what would you do? And you actually answered that before we ever got to it. So thank you for taking the words out of my mouth on that one. But if somebody wanted to reach out to you, what's the best way they could reach out to you if they had any direct questions for you?
They can find all my contact info, including my calendar, on our website at Craft Capital Investments. That's Craft with a C, CRAFT Capital with an A, Capital Investments with an S.com.
Awesome. Well, Shawn, thank you so much for your time. And for those of you that viewed, if you found value in this one, let us know. Or if you got questions in the comments, feel free to put that in there as well. And if there's somebody that could find value with this, feel free to share that with them. That way they get the message. And again, that's our whole hope here is hearing veteran stories, what they did in the service, and that transition out so that you can see that you can have the same level of success that Shawn's had as well. So again, Shawn, thank you so much for your time on this one.
You're welcome, Will. Really appreciate it.